Hey, what's going on, guys? I hope you guys are having a good day. I'm Dr. Boyce Watkins from Your Black World and the Black Business School, and I want to welcome you guys to the Black Financial Channel. That's theblackfinancialchannel.com. So if you'd like to get daily financial news and commentary from a Black perspective, join us at theblackfinancialchannel.com. So I want to give you guys some updates on what's going on with the stock market. This week, you saw the market had a major plummet. We lost about 1.7 trillion with a T in economic value in a 48-hour period. That's a lot of money. But then again, some would say it might have even been imaginary money because there was a correction coming. Everybody knew that there was going to be a market correction. They just didn't know how big. And the little thing called the coronavirus instilled something called fear, which accelerated the process. And so anyway, I want to say hello to Duran and Rasul and Markeisha from Philadelphia, and Rasul's out of Houston. Good to see you guys. Hit the thumbs up button if you haven't done it yet. Please hit the thumbs up button and let us know what city you're from. All right, so let me go through this quick article on CNBC. I got a meeting to run to, but I want to give you guys a quick update for those of you who've been asking what's going on. It says the Dow Jones Industrial Average traded nearly 400 points higher, or 1.5%. The Dow is up. The Dow 30, the S&P 500, and the NASDAQ all kind of went up. The NASDAQ went up a little bit more than the Dow did percentage-wise, but the NASDAQ tends to also drop more than the Dow does. So the NASDAQ is kind of volatile. And so some big winners are Boeing, 3M, Walgreens Boots Alliance, which is interesting. I guess maybe Walgreens because of the coronavirus, and they sell a bunch of like medicine or whatever and disinfectant and all these things you need to fight diseases and viruses and everything. Let's see here. The 10-year bond yield rebounded. So yields went up, which would mean, I guess, bond prices went down. So that means that you're seeing more money flowing from bonds back over to stocks. So people are starting to feel better about stocks. I'm not surprised. I mean, from a behavioral standpoint, in terms of investor thinking and how sentiment is going to drive the market, you would expect that people kind of just are accustomed to these reversals. Like they're kind of accustomed to, what goes down eventually comes back up, even though there's nothing to say that that's always going to be true. Right. So just, be careful with that thinking. But it appears to be the case now. This morning so far, the Dow's up by about 400 points. So that's a big deal. Let's see here. So according to a guy named Bianco, I don't see his first name here. He's the chief investment strategist for some company, DWS. Yeah. He says, unfortunately, I think this is going to be a full-blown correction. He says it's a material impact to our earnings outlook, and it's probably going to be another year of flattish earnings growth. So what he's saying is, from a fundamental standpoint, don't get all excited. There is a lot of reason to believe, even before the coronavirus hit, there was a lot of reason to believe that things just couldn't continue to be this good for this long. I hope you guys have been investing because so much money has been made, and it's been so easy to make money that it's just been kind of ridiculous. And so at some point, there's going to be a correction. I was watching that show that I really like on Netflix called Explained, and they did one on the stock market, and then they did one on or maybe it was the same one, the stock market, and they talked about capitalism and how capitalism can work well to accelerate economic growth, but how it has not worked well in the United States because you focus solely on the interests of the shareholder over everybody else. And one of the things I picked up from that was that there's a guy named John Maynard Keynes. Was it Keynes? No, scratch that. It was Milton Friedman at the University of Chicago. The University of Chicago is interesting. They're kind of like this Mecca. That's actually where we're getting married on July 11th, because Alicia's a graduate of the University of Chicago and she just likes that church. And, I thought it was fine. But University of Chicago is kind of this Mecca of finance. But the more I really think about it, the more I really believe that some of their theories and ideas have actually set our country back economically. And one example I'm thinking about right now is that, from what I understand, Milton Friedman was the guy who went out and wrote essays basically saying that the job of a company should be to maximize the wealth of the shareholders, and that's it. And so companies started buying into this, which created this kind of greed is good mentality. the Reagan era comes along and they start screwing over their workers, they start screwing over their suppliers, they start screwing over their customers, they screw over the environment, all because they want to take care of the shareholders above everybody else. And that's created a really toxic form of capitalism. And as I've talked to Black people about building economic systems and what the new Black Wall Street should look like, I've told you guys a lot, and I repeat this as much as possible. I don't like terms like Black capitalism. People who don't understand, the logic or don't understand the philosophies and the ideologies that we share on this platform, they'll say things like, "Oh, well, Boyce is a Black capitalist," and I'm like, "No, I'm not I'm not interested in being a Black capitalist, because the brand of capitalism has been tarnished, almost like how the brand of feminism was tarnished, by the Me Too movement. I feel that there were people that went too far, to the extreme, and they undermined the good things that could have come out of a feminist movement. So the same thing is true with capitalism. When you turn capitalism into just sort of unchecked, relentless greed, then you make capitalism look like a very bad thing. And so anyway, I know that was a tangent of a thought, but I processed that because I encourage you guys to go watch that documentary on Netflix. It's called Explained, and they have one on the stock market. And I think it's a good way to kind of see what's right and what's wrong with America's economic system. Because one of the points that they made also, and this is why you shouldn't run away from capitalism, you shouldn't run away from stock markets, is that most countries that got rid of their stock markets eventually ran back to create them later, because they realized, like, wait a minute, oh, no, we actually need money. We actually need money to do things. So even the socialists who just say that money is always bad, money is always evil, those people need money. They end up going to work for the capitalists because they don't have enough money to eat. The Black Panthers would have survived if they'd had a stronger economic system. The civil rights movement could have been more successful with the stronger economic foundation, right? So economics has to be an important part of your strength strategy as Black people. So that was my little tangent, and unfortunately, I got a meeting to go to, so I can't really elaborate as much as I want. Also, I can't really go as much into detail as far as what's going on with this coronavirus and the stock market thing. But let me just kind of give you a couple of the big bullet points. Basically, they're saying here on CNBC that the sell-off accelerated after U.S. health officials warned that the coronavirus is likely to continue to spread throughout the U.S. So the virus is here to stay. I'd be curious to know how much more lethal the virus is than, say, the common flu. And why we're afraid of the coronavirus so much more than we're afraid of the flu, which also kills a lot of people every year. I'm not saying that there isn't a reason to be afraid. I just like to understand that a little bit better. But in general, I think that there was an overreaction. I think the market kind of moved a little bit faster than what it should have moved. And I think that there are going to be some gains to be made. And I agree with the experts like Larry Kudlow and a couple other people who are basically saying this is a good buying opportunity. I know personally, I bought a lot of stuff today. I took a bunch of cash and said, okay, I'm going to go buy some stocks while they're cheap, because I do believe in the next week or two, you're going to see some positive price movement. Also, if you're a long-term investor, these little short blips, they make good conversation points, but they shouldn't drive your investing strategy, because remember, you're in it for the long term. You're not in it for the short term. That's very important to remember. So by the way, so if you want to take a look at my stock market investing class, you can actually get a 30-day free trial. If you'd like to go try it out, you can go to theblackstockmarketprogram.com, THE. That's theblackstockmarketprogram.com. Also, I'll be speaking in Oakland on Saturday. So if you'd like to know more about that, you can go to drboyseminars.com. That's drboyseminars.com. Hit the thumbs up button. Please hit the share button before you go. And I'll see you guys later. Today, a little bit later on this afternoon, I'm going to interview Monique, the comedian Monique, on drboycetv.com at about 2:30 p.m. Eastern. So if you'd like to join us there, feel free to do that. All right. See you guys soon. Take care. Have a great day. Be good. Peace.